Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 6th of March 2016 and we're providing our gold and silver update for week ending the 4th of March. Gold rose in US dollar terms last week by $36, from $1,222 to $1,258, having been as high as $1,276 and as low as $1,219. In sterling terms it rose by £2, and in euro terms it rose by 24 euros. Silver rose 84 cents from $14.67 to $15.51, having reached a high of $15.73 and a low of $14.66. In sterling terms it rose by 31 pence, and in euros it rose by 0.66 euros. The gold to silver ratio fell from 83.2 to 1 to 81.1 to 1, almost reversing the previous week's rise. The Dow Jones closed on Friday at 17,006, up 62 points on the day and up some 367 points on the week. And the Nasdaq closed at 4,717, up 9 for the day and up some 127 points on the week. Brent Crude was just over $3.60 up on the week at $38.72, and US Light Crude also up more than $3.10 at $35.92. The dollar index stands at 97.34, down just 0.76 on the week. Well, last week from Wednesday onwards saw an appreciative rise in both gold and silver. Gold rose 2.89% on the week and silver 5.58%, making up a little lost ground from the week before. Friday's total non-farm payroll employment figures showed an increase of 242,000 jobs in February, higher than an upwardly revised 172,000 in the previous month, and beating market expectations of 190,000. Employment gains occurred in healthcare and social assistance, retail trade, food services and drinking places, and private educational services. Job losses continued in mining. This led to a positive upbeat in the US stock market and gains made on all of the world's main exchanges. In addition, last week, official figures indicated that the US economy expanded at an annualized rate of 1% in the quarter, compared with an initial estimate of 0.7%. The strong jobs market and improved growth outlook, together with signs that inflation is creeping up, could prompt the Fed to raise rates in the summer. Though such figures traditionally would mean a strengthening of the dollar and a weakness in precious metal prices, we actually witnessed positive movement towards gold and silver. Part of the reason for this is that the US Commerce Department said that the gap between exports and imports climbed to $45.7 billion in January, from a revised $44.7 billion in December. Exports of goods and services fell 2.1% in January to $176.5 billion, the lowest level since June 2011. US exporters have been hurt by a global economic slowdown and by a strong dollar that makes US products more expensive overseas. Imports also fell 1.3% to $222.1 billion. The lowest level since April 2011. This does not augur well for the Fed to raise interest rates, and therefore this is reflected in all markets. An announcement in the Wall Street Journal reported, quote, BlackRock Inc. on Friday said it has suspended the issuance of new shares in the roughly $8 billion iShares Gold Trust, citing a surge in demand for gold, unquote. Perhaps the greatest influence of all behind gold's rise has been negative interest rates. The Bank of Japan last month joined a growing number of central banks, including the Swiss National Bank and the European Central Bank, when it introduced negative interest rates in an effort to spur consumer spending. Sweden's central bank said on Thursday it was moving interest rates further into negative territory and warned it could cut again. Canadian officials are also weighing cutting borrowing costs below zero, and Federal Reserve Chairwoman Janet Yellen said this week the US Central Bank is studying the feasibility of pushing short-term interest rates into negative territory if needed. Until now, we have seen considerable cooperation between governments and central banks. However, they have moved in the past couple of weeks decisively into competitive mode again. With Brexit a possibility in the UK, China's economy waning, governments feeling the economic pinch and investors becoming very uncertain about the equity markets, we are seeing a flight primarily to gold and silver benefiting on the back of it. Technical analysts are now predicting that gold may surpass the $1,300 level this week and silver could reach $16. We do not argue with those assessments as we are witnessing increasing demand and nervousness. We anticipated a rise last week of no more than 5%, though silver did marginally surpass this and gold less so. And we envisage perhaps another small rise and then a fallback. However, we are coming close to the level where we stated that gold could be reaching that bull market territory, though silver is still $1 to $2 off that level at present. Our view as last week is that if you are short on these metals in your portfolio, then you should consider buying on dips, as this nervousness in the markets have a little way left to run. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.